It's time for the #1 Southern California housing market update. You are missing out if you don't see how the first 2 weeks of September 2022 compare to years past. Plus, stick around to the end where we're going to discuss what to be watching in the fourth quarter of 2022. We can guarantee it'll be pretty much unlike any other fourth quarter in years past. Hey there, Christian Walsh, real estate agent with Wire Associates. We have been helping sellers and buyers make the best data-driven decisions in this crazy market. So if you're ready to dive into the single family and multifamily numbers, plus inventory levels for Orange County, LA, Riverside, San Diego, San Bernardino, and Ventura counties, hit that like button and let's get started. Let's dive into the data, and here we go. We're going to start with single family residential numbers. And remember, this is the first 2 weeks of September. We got 5 years, 2022 all the way back to 2018. And I've removed something from this chart that we're going to add back because I want to take a close look. I want you to see where numbers are without putting in new listings yet. The new listings are very relevant, and I'm going to explain why. But first, let's just look at these numbers. We can see that the number of sold properties and the number of pending properties, these are properties that buyers have written an offer and the property is now in escrow. That's very important to understand. Some people who say there's no demand out there, no buyers whatsoever, these are buyers right here writing offers. So you can see that when you compare 2022 for the number of properties that are under contract, it is lower than all these other years. We got to go back to 2018 to see a number that's even close. So 944 versus 1,020. So we are at a record low when you look at these 5 years. Now, don't forget 2020, 2021, during this time, we were still in a crazy hot market. And 2019 was more of a normal market. And for all intents and purposes, 2018 at this point in time was a normal year. We are actually not too far off a normal year. So if I just showed you this data, if I removed all the years and left this chart, you'd look at it and you say, okay, we can see that there's a change in the market. It looks like 2018. Looks like things are slowing down, but now we're going to add in new listings. And I'm going to explain why this is so darn important. So here's the big difference between 2018 and 2022. The numbers of properties going under contract are very close, a little bit lower in 2022. Can't deny that. But the number of new listings is dramatically lower. So you can see the gap between the new listings and the pending sales is very, very low. Just as low as the crazy time in 2021 where we said it was a seller's market. In fact, the gap's tighter than 2020, which was also a seller's market. Now, in this video, we're going to discuss the Altos research numbers. We're going to show you total inventory, because if we just had a month of low listings and demand stayed low, that could still lead to an increase in inventory. And we know that an increase in inventory will be required for big price drops. But looking at these numbers right here, you can see that we are still in a very tight market. So that's very relevant, very important. And I've been saying this over and over. This is the trend we've seen. Very, very different from the past when interest rates went up and we saw inventory climb at the same time. We saw new listings climb. This is not happening in this current market. Looking into other counties to see if Southern California, if the trend is the same, and it is very obvious that we're similar to 2018 numbers. We will be a little bit lower than 2018 numbers when it comes to pending sales. We're below 3,000 listings. That didn't happen in these previous years. So this gap is tight between the new listings and pending sales, about 2021 level, and definitely tighter than 2020, which were both considered sellers markets. Check in Riverside, we do have record low new listings and our pending sales are down. That gap is not quite as tight as 2020 and 2021. So this is something to watch, and we're going to look at the Altos research reports to see if inventory is starting to increase in Riverside, because that will be the first sign. Once we see inventory continue to go up, that will be the first sign that potentially we could have some price reductions. You're not going to have major price reductions if supply and demand stay in check with each other. San Bernardino follows the same trend. The gap, though, between the pending sales and new listings is a little bit larger, maybe just a tiny bit larger than 2020 and 2021. Definitely smaller than years past. So it's something we have to watch and see if maybe there's going to be a change in inventory levels in San Bernardino as we go into the fourth quarter. Ventura County, fewer properties. It means numbers are skewed because fewer properties trade. We can see, of course, pending sales are down, matches the trend that we're seeing in Southern California for single family. Put our new listings in and you can see new listings are down as well. And it is nowhere near the level of inventory we saw in 2018 and at a record low. So we'll have to watch and see if inventory stays low in Ventura. And finally, San Diego, which tends to be a similar market to Orange County. You can see pending sales are down, maybe a little bit slower than we're seeing in Orange County, but the new listings are also down as well. Look, compare 2018 to 2022 from the listing standpoint. Big difference in the levels of properties being listed. This is showing demand is down, but supply is down as well. And that is quite frankly not being discussed enough in some of the news sources out there. This is the issue we have in Southern California. We are not seeing inventory increases, although let's see what the Altos research reports say in a little bit here. Diving into the multifamily numbers quickly, one of the only places you are going to get the multifamily property numbers for Southern California. I'm doing the same thing in Orange County. I've pulled out the new listings. You can see that we've got ups and downs in the number of properties going under contract. But if you average this out, it is really not all that different right now from a pending sales standpoint. Higher than 2019, a little bit lower than 2020. So it is a solid market for multifamily. And you're going to see this in general, this trend that people are still buying multifamily because rents have gone up so quickly. These properties are penciling. Even if an investor has to put debt service on it, which is a little more expensive right now, and maybe a lot more expensive right now, they're still penciling. And particularly for those doing a 1031, it still may make sense in their case to exchange those funds into something else. But here's where it gets interesting. So despite the fact that we have a pretty solid multifamily market, our listings are down. And this I attribute to the negative news that people are seeing out there about real estate. Those same things that buyers are hearing, sellers are hearing as well, and they're saying, hey, we're not going to list. LA is certainly an outlier, and I'm going to explain why they're an outlier. So we can see that demand is down in Los Angeles for multifamily. Listings are down as well, so it doesn't make it immediately evident that this is not as much of a seller's market. One of the potential reasons that the number of properties going under contract is down is because LA City and LA County are still under eviction moratorium. So if a tenant is not paying rent, a landlord cannot get them out. That definitely is dampening desire to own properties in Los Angeles. And a lot of folks, when it comes to investment properties, whether it's single family condo or multifamily, are getting out of being a landlord in Los Angeles. So we will continue to release our eviction moratorium updates. They may be ending at the end of this year. We will keep you posted on that. And back to our regularly scheduled program where we have solid demand. Now, it doesn't compare to 2018 in Riverside, but it's very similar to 2019, 2020, 2021. And then we get into the inventory and we can see that inventory is down. So this is more of a seller's market for Riverside multifamily than we've had in a long time. And San Bernardino, look at that big drop of new listings, almost half as many year over year. Have been listed, and the demand is still solid. Now, it is a little bit lower than last year, but the ratio, the gap between the new listings and the pending sales is much tighter this year than it was last year. Ventura, another spot, again, where it's tough to get much out of the data because not as much trades, but you can see that the listings are way down. This is a record low number of listings. So even with just one property going under contract, if there's only 2 new listings, that's going to go ahead and seem like the market's on fire. And then San Diego, big drop in the number of buildings that were listed, but still a solid number of buildings going under contract. So we almost have that flip where we have more properties going under contract than listed. So we'll have to watch San Diego. This is an extreme seller's market currently in San Diego for multifamily. All right, let's take a quick dive into the Altos research reports. And don't forget that you can enter any zip code or city in the nation and sign up for a report. That's all you do in the box right here, and you are good to go there. But let me show you the national numbers, and we're going to look specifically at inventory. There's a lot of data on here. The market action index is another important one. It gives you a quick overview here on what's going on. And we can see, and you'll see on all of these reports, that it is a little bit lower, a little bit less of a seller's market than it was last month, but month over month, it's not a huge drop. There hasn't been a big change. Let's look at inventory at the national level. So we were talking about how things dramatically increased, and that was not a good thing. And it was not supposed to happen this time of year either. So things were not looking good for the housing market. As interest rates went up, inventory started to go up because demand was also dropping at the same time. But supply and demand are in check right now, and that's why we're not hearing about massive price decreases yet. It could still happen, but we're not hearing about it yet. You can see that from an inventory standpoint, we actually had a week over week increase from the September 9th report to the September 16th report. There actually was at the national level an increase of inventory. So that's an interesting trend. We'll have to see if that continues. We should continue to see it go down, but if it goes back up, we can get into trouble. The inventory level itself is similar to where we were in 2020 at this time of the year, but nowhere near where we were in 2019. We had far more. State of California, same thing. Now, in the state of California, we're above 2020 for inventory. We did also see a slight uptick in that week over week data. So let's see what happens. But again, not at 2019 levels, and still a strong seller's market in the state of California. Moving into the county level, Orange County inventory dropped and then plateaued a little bit. We are below the level of 2020, or right at level of 2020, and below 2019. Moving into LA, we can see that that inventory went up slightly. So I don't know if sellers are feeling a little bit better about the market in the first 2 weeks of September. We will see what happens, because this doesn't take into account the Fed increase that's happening in September, or has happened by the time you watch this video. So Los Angeles inventory year over year is up, year over year for 2 years is up, but going back to 2019, it is not that high. Riverside, we saw a slight uptick, nowhere near 2019 levels of inventory. Anywhere we're seeing this slight uptick, we have to see if it's gonna level out again, if it's gonna go the other way. Maybe sellers are going to get a case of FOMO and say, I'm going to miss out on the peak pricing, so I better sell right now. San Bernardino leveled off. It is definitely above 2020 and 2021 levels, but nowhere near 2019. I'm like a broken record, same things over and over. Now, Ventura is actually slightly below 2020 levels, and it doesn't look like it's plateauing. It looks like it is continuing to drop. So that is good for Ventura sellers. This is a trend that will lead to not having big price decreases. I know buyers want that, but sellers, it doesn't look like that in Ventura. And then finally, San Diego, we can see that inventory is up compared to 2020 and 2021, but still well below 2019 levels. You really should sign up for these reports wherever you are, whatever city or zip. Sign up for it so you could be tracking your local inventory, because even within Southern California, you can see that there's differences. You need to know what's going on in your neighborhood. That's what actually matters. Fourth quarter 2022 has a lot of unknown. We don't know where interest rates are going to be. We don't know if inflation will be in check. We don't know if the war in the Ukraine will be over. There is a lot we don't know. And let me tell you, typically what happens in the fourth quarter. We do see that sales will slow down. It's the time of the year where most people are focused on the holidays. We'll see the median home price drops. It does every year going into the fourth quarter. In fact, I released a video on it, and we can expect price drops to happen in the fourth quarter. But in addition to some of the unknowns we just mentioned, we also have an unknown as to what's going to happen overall with pricing. We're seeing price cuts in almost 40% of listings out there. That's what the Altos research reports are showing. These are high levels. Will these price cuts continue, and will it lead to dramatic price reductions? We don't know this fourth quarter if the price drops that we're seeing are going to be below historical traditional levels, or if they're going to actually be meaningful drops in the market. We also don't know what's going to happen with inventory levels. Typically, inventory goes down as fewer people list around the holidays. That's what we were expecting to see this year. But as we just ran through some of the Altos research reports, there were slight week over week ticks up in inventory. Are sellers thinking, you know what, the market is peaked, and they have FOMO, fear of missing out about the peak in the market, so they're going to dump their homes on the market? Now, of course, there's a lot of folks who won't list their homes because they're locked in at crazy low interest rates. And where would they go with values through the roof? Maybe they can't even afford to sell and move into another home. So these are some of the checks to inventory levels, but it is possible that we'll get to the point where we start to see more inventory hit the market. Now, of course, the mystery of the fourth quarter will also segue into the mystery of the first quarter 2023. This spring buying season will be another one that nobody will be able to predict. So let us know in the comments below what you think is going to happen fourth quarter 2022. Do you think we're going to see a traditional slight drop in prices, drop in inventory, or will things tank? Let us know in the comments below. Make sure you sign up for the Altos Research Reports. It is free, and you'll also be subscribed to our free weekly email newsletter, where we cover topics like this, plus foreclosures, eviction moratoria, landlord-tenant laws, and a whole lot more you're not going to want to miss. And you're not going to want to miss this housing market update video, where we dive into the data that you need to know about the housing market 2022. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.